Today's transaction has strong strategic merit for Pilbara. It represents an on-strategy, counter-cyclical transaction that is highly accretive to Pilbara shareholders across a range of key metrics, including NAV, mineral resources, and production. It diversifies our current operations by adding a second potential production centre, provides continued exposure to our Tier 1 asset, and does not dilute Pilbara's overall portfolio quality. There are only a finite number of high-quality development projects available globally, and we're pleased to have secured Salinas Lattin's project. It provides near-term production optionality, underpinned by a fast-tracked permitting process in a pro-mining jurisdiction with established infrastructure already in the region. It also enables us to leverage our proven in-house technical expertise to de-risk the development and optimise the project. And Salinas' strategic location and 100% uncommitted offtake can help unlock the North American and European battery markets and diversify existing customer base. The transaction structure, importantly, ensures we're able to preserve our strong cash position and are well capitalised to fund our existing near-term organic growth and Salinas, but only when market conditions support. Now, turning to slide 13, I mentioned already that this is an on-strategy, highly accretive transaction. It's a transaction that delivers Pilbara a significant uplift in terms of production, which is expected to increase 47% with the addition of Salinas, and that's prior to any FID on P2000. Salinas also immediately contributes 20% of the combined resource. If I could leave you with a takeaway on this slide today, is that we're issuing 6.4% of our shares, and we're getting a producing asset, or a future producing asset that could add 30% of our production. Now, moving to slide 14, as Dale said at the start, our fourth strategic pillar is diversifying beyond Pilgangoora, and this transaction delivers a pathway to do that and revenue beyond Pilgangoora, and spreading our operational presence across a second hard rock mine in an emerging lithium region, as illustrated on the map on the right-hand side. Salinas and its location in Brazil provides us with an opportunity to service the emerging North American and European battery supply chains, while still having optionality to also service our existing customer base into Asia. Moving to slide 15, Salinas gives us continued exposure to Tier 1 assets. It's one of the world's largest undeveloped hard rock lithium projects, and the main deposit is the Cleaner deposit, as Chris spoke to earlier. The majority of the resource is there, but there are also a number of prospective targets, as Chris spoke to before. And there's been a significant amount of drilling completed at the project to date, with a resource base that has grown rapidly, as you'll see in the bottom right chart. This has resulted in a high degree of confidence in the resource, which sits predominantly within the measured and indicated categories, you can see. And as part of our due diligence process, our team has completely remodelled the resource to ensure comfort for that. And the Pilbara team has been really impressed with the Latin team culture and the quality of the exploration work completed by the team on site. With this strong foundation of work completed by Latin, it places Pilbara well to work with Latin to optimise the DFS, the mine planning, and define a ore reserve with time. Now, moving to slide 16. We mentioned earlier that Salinas is a top 10 development project, and this is helpful on the chart of framing that. On the right-hand side, the chart shows that in jurisdictions out of Africa, this is where this project sits. Sits favourably among other Tier 1 projects, and with Kathleen Valley now moving into production, it is expected to be the largest producer of all the advanced stage development projects that have disclosed current production estimates. Moving to slide 17. Over the last 24 months, the Pilbara team has completed extensive opportunity screening of well over 100 projects across multiple continents. Drilling down into Brazil, we've completed a lot of work over the last 6 months on Brazil and Minas Gerais as a state, and rate it very highly as a mining jurisdiction. Brazil has a large and established mining industry, as shown on the page. The Salinas project is located in Minas Gerais, which hosts the third largest economy in Brazil and is home to over 300 operating mines, with many global mining companies operating in country, with the logo shown on the right, including a number of existing lithium operations, which I'll come back to. The government is pro-mining and actively seeking to develop the lithium sector, as Chris mentioned earlier. This is demonstrated by Latin recently signing an MOU with Invest Minas, a government agency. Now, the MOU is about helping to fast-track approvals for the development of Salinas and collaborate on building a lithium sector in the state. The approval process and support from the local government is a key advantage of the region, and with Latin adopting the same fast-track permitting process as the nearby Sigma Lithium has completed. Moving to slide 18. We thought it would be useful as we went through our screening process to help contextualise Minas Gerais as a region and compare it against WA, which our existing operations are located. As you can see, Minas Gerais does have hundreds of operating mines, underscoring the scale of the mining industry that has already been established there. Further, we believe that Minas Gerais compares favourably with WA in terms of costs, permitting timelines, power, and access to skilled labour, all of which we've closely analysed as part of our due diligence, and a key criteria we looked at when assessing the attractiveness of the region versus other regions we also look at. Moving to slide 19. With a number of operating mines in the region, Minas Gerais is well served by existing infrastructure, roads. There are existing sealed roads providing access to near sites, the town of Salinas, and there are industrial roads through which concentrate can be trucked to the port. With power, that is one of the most important advantages we see the region. The region is backed by hydro grid power, with Latin having access to this. This is a key benefit from both an ESG and a cost perspective. In terms of water, Salinas has access to a sustainable water supply coming from a proximal dam, and further on water, as part of the PEA and now the DFS, dry stack tailings has been the base case, and which is really important as part of the permitting process. And moving to the port, the port of is around 520 kilometres away from Latin. It's been identified by Latin as the port option. There are other port options, and our team has been to this port, inspected the facilities there, and are happy with what they see. Moving to slide 20, near-term production optionality. We have high confidence in the ability to bring Salinas online quickly when market conditions support. Having observed the recent success of Sigma Lithium, which has an operation 75 kilometres from Salinas, now Sigma and its project was permitted and constructed in under 2 years. It provides a good template for Salinas and Pilbara with Latin. Latin completed the PEA in September 2023, as Chris mentioned earlier, and recently announced a major mineral resource upgrade, 60% more than the prior resource used in the PEA. Latin has commenced work on the DFS, and Pilbara now engineering and studies team to work alongside the Latin team to optimise the DFS, including continuing that after we reach the scheme implementation completion. We will provide an update on the timing of the study as soon as practicable in due course. Moving to slide 21. As has been mentioned previously, Salinas is a hard rock operation. The key benefit of this, it allows us to leverage our existing technical expertise in hard rock development and operation for the benefit of both sets of shareholders. In terms of mining, Salinas has been designed as a single open pit mine, which is amenable to drill and blast, similar to our existing Pilbara asset. Further, with a big mining presence in the region, there is a skilled local labour force and an array of mining contractors. Our team has visited a number of those contractors. In terms of processing, the spodumene is coarse grained, so amenable to DMS processing, and we see opportunities beyond this in the future to optimise the flow sheet, including considering things like midstream processing in the future. Shipping and marketing I've already covered, with port access key. Now moving to slide 22, we've mentioned a number of times that Salinas' location in Brazil potentially provides Pilbara with exposure to new battery end markets in North America and Europe. And the chart there shows that based on Romation numbers for June, both those markets are forecast to grow materially over the coming years, which we see as a key positive. Now, we also have the flexibility to continue to supply Asia in the near term. I'll then move to slide 23, talking around financial flexibility. As we mentioned earlier, undertaking the acquisition of Latin via all-share consideration preserves Pilbara Minerals' strong balance sheet and ensures Pilbara remains well capitalised to fund our expansion strategy at Pilbara and the future development of Salinas. Now, the company intends to fund Salinas plant construction with project debt together with other funding sources as required. This may include corporate debt, strategic partnerships or off-take financing. Latin has already been running a strategic funding process for the project, and we understand has received a significant range of interest from a range of parties on the project. Funding of near-term modest costs of Latin to deliver the DFS will be made by Pilbara's existing cash reserves. Pilbara is in a stronger position to fund the project in a more efficient way than Latin, given our size, but we will only do so in terms of go-forward development when the market conditions support. Our strong balance sheet continues to position Pilbara well relative to peers both locally and globally. And on that note, I'll hand back to Dale for concluding comments.